Hello students, so in this video also we will prepare various ledger accounts. See in the question given over here on the screen, you can pause the video, note down this question, and with the video you also solve the problem in your notebook for the better understanding. So here it is given, Vema and Company started business with capital, open ledger account to record the above and the following transactions. So as per the question and the transactions given, I have already prepared various ledger account. So you just pause the video and draw all this ledger account. Cash account, capital account, shelves account, purchases account, Katumba Ujama village account, Sadara and Sons account, sales account and Simba Matoto account, then sundry expenses account and wages account. So now starting with the sum. See student, listen very carefully to the video. Don't just hurry up to solve the question. If you want, you can increase the speed of the video, but go through full video for the better understanding. Once you understand the concept of posting the transaction in ledger account, balancing, it will be very easy for you to post any type of transactions. So what is given? Vema and Company started business. So first of all, we will write down above in the books of Vema and Company. In the books of Vema and Company. Now it is given, Vema and Company started business on 1st Feb 1980 with capital in cash 15,000. So I'm just showing this working also. See, as started business with capital in cash means the two accounts affected are cash and capital. Cash comes in the business. Cash comes in the business. So which account will be debited here? So account debited will be cash account. Cash account is a real account, and account credited will be capital account. Okay, so cash comes in the business, so you have to write down on the debit side, in the cash account, debit side in the cash account. See what is year given? 1980. So in all accounts, in the date side you will write down year 1980 in all accounts. So as per the transaction on 1st Feb, cash comes in the business. So cash account, see student, I am writing in the cash account debit side. Whenever cash comes in the business, you have to write down in the cash account debit side. 1st Feb, you are writing here the name of the account which is credited. So capital account is credited, so here you will write down word capital. Okay, amount is 15,000. Okay, see for some universities they are also writing here on the debit side to capital, in the credit side they use word by. So you can add like that here. So here you are writing capital. Now in the capital account credit sides, which account is credited? Capital. So write down in capital account credit side 1st Feb. You have to write down the name of the account which is debited. So we have written one effect debit side of the cash. So here you are writing word cash. Amount is 15,000. So remember, for any transaction, one effect will be in one account debit side, other account it is credit side. Now see, the next transaction is given on Feb 2. It is given, bought new shelves for shop for cash. So one thing is clear for the 2nd Feb transaction, that we purchase something for cash. So cash went away. So cash account will be credited. Now which account to be debited? See students, here many times students are making mistake. What is given here? Bought. So sometimes students write here word purchase account debited, but don't do this mistake. Whenever we buy any asset, we have to debit to that asset account. So shelves account will be debited. Shelves account debited and cash account is credited. If we purchase it on check, so instead of cash you have to write down word bank. So shelves being a real account, debit what comes in. So shelves account get debited. So in the shelves account, writing on the debit side of the shelves account 2nd Feb. Here you have to write down the name of the account which is credited, that is cash. So amount of the shelves is 2000. So 2000. And the second effect, which account is credited? Cash. Cash goes out. Real account rule. So in the cash account, credit side 2nd Feb, the name of the account which is debited, shelves 2000. So here you can see bought new shelves. So shelves account we have debited and cash account credited. While writing in shelves, you have to write down word cash, and in cash account we are writing shelves. Then the third, it is given on 4th February, third transaction. Bought, now it is word goods. Bought goods from Katumba Ujama village. Okay, bought goods from Katumba Ujama village. Whenever there is a purchase or sell of goods, you have to use the word purchases or sells. But whenever we buy or sell any asset, we have to give debit or credit for that respective asset. So here it is bought goods. So the account debited will be purchases. If it is on cash, you have to credit cash. If it is on credit, you have to give credit to that supplier, that means that creditor's account, that is Katumba Ujama village account. Okay, so purchase account write down on debit side and Katumba village on credit side. So for purchase goods from Katumba Ujama village, write down on the debit side of purchases account 4th February, debit side of the purchases account 4th February, you will write down the name of the creditor, Katumba Ujama village account, amount 7000. And in Katumba Ujama village account, write down on the credit side purchases account 7000. Now the next transaction given on 5th February, again bought more goods from Sadara and Sons. So in the same way, only the party's name will be changed. Bought more goods from Sadara and Sons. So purchases account being nominal account, debit the expenses, and personal account Sadara and Sons, debit the receiver, credit the giver. So Sadara and Sons is giver, creditors account we credit, and expenses account we debit. So applying that rule, purchase account will be debit and Sadara and Sons account will be credit. So 5th February, again you have to write down in purchases account debit side. Now here word will be Sadara and Sons account 5000, and in Sadara and Sons credit side purchases 5000. So you can see here for both the purchases account is debited, and the respective creditors account, here Katumba village account and here Sadara and Sons account we credited. Now the next one, sold goods for cash. When we sell goods for cash, see students, here your revision is also for account which is debited and credited. So sold goods for cash. So when we are selling goods for cash, which account is debited? Cash account is debited. And which account is credited? Sales account is credited. So cash account, debit side for sold goods for cash, cash account, debit side 10th February, write down word sales, amount is 3000, and sales account credit side, here sales account credit side, write down cash, cash amount is 3000. Next one, see now it is sale of goods on credit, sold goods on credit to Simba Matoto. So now it is credit sale, so cash will not be debited. See, when cash account comes in effect, when cash is coming or cash is going, whenever there is a cash receipt or cash payment. But now it is a credit sale, right? So one account will be same, that is sales account, credit side, whether it is cash sale or credit sale. Okay. Now when there is a cash sale, we are debiting cash account. When there is a credit sale, we have to give debit to that customer account. So Simba Mtoto, who is our debtor, right? So when there was cash sale on 10th February, cash account debit and sales account credit. When there is a credit sale to Simba Matoto, instead of cash, you have to give debit to Simba Matoto and sales account will be credited. So Simba Matoto account, write down on debit side 15th Feb, sales amount is 5,000 and sales account, write down credit side. See, in Simba Matoto we are writing sales here. So opposite effect, here you are giving debit, now credit effect in the sales. Simba Matoto 5,000. So see student, here in the sales account credit side, when there was cash sale, we have written here cash. When there is a credit sale, we have written here the name of debtor. And second effect, for 10th February we passed in cash account. For credit sale, we have written in the Simba Matoto. Okay, it's very easy, but there is a need of practice, student. Don't be afraid of account, that how to solve this ledger account, how to close. If you do practice, just go through the sums. And even if at least you will pass entries looking to video with me, you will get more clearance with the one video. Next one, now paid to Katumba Ujama village on account. Now we paid to whom? Katumba Ujama village. How much? 4,000. So on 16th, one thing is clear, paid means cash goes out. So cash account you have to credit. Now to whom we paid? Who is the receiver of the cash? Katumba Ujama village. So his account will be debited. Okay. So Katumba village, debit side you will write down on 16th Feb, cash 4,000. And the second effect, in the Katumba village you are writing here cash. So in the cash you have to write down on the credit side. Okay, write down here Katumba Ujama village, and how much amount? It's 4,000. See, you can see here from the Katumba Ujama village we purchase of 7,000. Now from 7,000 how much we paid? 4,000. So at the end when we close the account, there will be the balance left, that the amount which is payable to Katumba Ujama village is our creditor. Next one, now there are two payments, one for sundry expenses, other for wages. So both the transactions we will see the effect. So on the 19th February, see for both the, which account will be credited? Cash account. Okay, whether it is expenses or wages, amount is when going for this expenses. So that expenses will be debited and cash will be credited. So for the sundry expenses paid, sundry expenses account is debited and cash account is credited. For wages paid, wages account is debited, cash account is credited. In this both case, cash goes out. If suppose instead of cash it is given that expenses paid by check, so instead of cash you will write down here bank account. Okay, if it is given. Now here it is not given, so it will be cash. So in the both expenses you have to write down on the debit side in the sundry expenses and wages. In both the account you have to write down effect on debit side, it is 19th Feb and 21st Feb. Here you will write down the name of the account which is credited, that is cash, and amount is 500 and 1000 respectively. So 500 and 1000, and the second effect will be in the cash account. It will be in cash account 19th Feb and 21st Feb, writing the name of that nominal account, that is sundry expenses and wages. Both are nominal accounts, so we have debited that account, debit the expenses. So applying that rule, so 500 and 1000. See students, in this way we pass all the effect of all the transaction. See, when cash is coming, we have to debit cash. When cash is going, we have to credit cash. When it is credit purchase, it will be purchased to that creditor's account. When it is credit sale, we have to debit that debtors, the one who is receiving goods, and sales account is credited. Whenever there are any expenses, give debit to that expenses, and money which is going will be credited. Now we will close ledger accounts. So while closing cash account, see again I am showing how to calculate balance. In the first video also we calculated balance. See here, cash account, any account which you want to close, first make total of debit side. So cash account debit side total is 18,000. Credit side total 2,000, 4,500 and 1,000, that is 7,500. Then take the difference of the both. So 18,000 minus 7,500, you will get balance 10,500. Okay. So write this balance on the lower side. So here debit and credit side, lower side is this credit side. So write here 10,500. Give it the name balance carried down. Balance C/D carried down. Give the last date of the month. After giving the last date 29th Feb, we have given the name balance carried down. Now write down the total both the side. We already made the total, it is 10,500. Now after writing the difference on the lower side, you can find out that total is same now both the side. This balance carry to opposite side. So here balance is on credit side. So write down effect opposite side. So here debit side, that is 10,500. Here sorry, you have to write down the total. I have written 10,500, it is 18,000. We made the total. So total we have written 18,000. Difference we took 10,500, which is balance. When you are writing here opposite side balance, give it name balance brought down, and the next month date, next period date, that is 1st March. Now in this way you have to close all the account. See this balance, the balance which comes here on the credit side, that is 10,500, it is known as debit balance. Okay, we carry it here on the opposite side, debit side. Here opening balance, it is debit balance only, but the closing balance here we call it as a debit balance. So cash account debit balance comes 10,500. Now we have to close capital account. Total is 15,000. Credit side is more, so we are writing lower side amount, that is here on the debit side 15,000. So give it name balance carried down. The last date 29 Feb, then carry it opposite side. On the credit side 1st March, balance brought down. See capital account always carry credit balance. Cash account, cash column carry debit balance. If it is double column cash book and bank column is there, it can carry debit or credit. if there is overdraft. But for the cash column, it will be always debit balance. Capital will be always this credit balance. Now shelves account. Shelves account. See, again we are closing the account. If there is a single transaction, you can just draw 2 lines, or you can also write like this 15,000 total both the side. So now writing amount to the lower side, debit side is 2,000, credit side nothing is given. So right here 2,000, balance carried down. Carry balance to opposite side. 2,000, give it name balance brought down. 1st March. See, shelves being asset, asset always carry debit balance. Now the next one, purchases account. Now we are closing. Purchases account, you can see there are 2 transactions. Debit side 7 plus 5. So it is 12,000. Credit side there is nothing. So when we are writing here lower side, credit side, balance carried down. 29th Feb. Carry this to opposite side. Balance brought down. 1st March. Now Katumba village account. See here credit side 7,000, debit side 4,000. So when we take difference from both, 7 minus 4, it comes 3,000. So that 3,000 you have to write down to lower side. Okay. Now after writing this lower side, you can find out the total both the side. It is now same 7,000. Now to this balance difference, this 3,000, you have to give name balance carried down. Give last date of the month. Then carry this balance to opposite side. 1st March. Balance brought down. So students, I am showing you each and every ledger accounts balance, so that if you are having any doubt, it will be clear. So you can see we purchased from this Ujama village 7,000, we paid them 4,000. So how much amount is still not paid, unpaid is 3,000, which is carried to the next one. Now whenever we pay 3,000 to them, that account will get closed if there is no more purchases. So till that time, this 3,000 for Katumba Ujama village is our creditor. Okay, amount is payable to them. Now same this Sadara and Sons. See, as there is single amount, you can just draw this line also, or you can write down 5,000, 5,000 in this way also. So now this is, there is just one amount, it is balance, balance carried down, which is carried forward. Balance here brought down is 5,000. So 5,000 Sadara and Sons is our creditor. Now sales account. See, we bought 3,000 by cash, 5,000 on credit. So 5 plus, we sold goods, cash 3,000 and on credit to Simba Moto 5,000. So total sales is 8,000. Sales include both, whether it is cash sale or credit sale. Writing amount on the lower side. So 8,000 you write on debit side. Balance carried down. This balance is known as credit balance. Okay. Write on opposite side now down. 1st March. Balance brought down 8,000. So sales always carry credit balance being an income. Now Simba Matoto 5,000. Writing amount on the lower side here on the credit side. Balance carried down. Carry to opposite side. Balance brought down. Okay. He is our debtor. We sold Simba Matoto goods worth rupees 5,000. Amount is still receivable from them. So this balance carried to his account. Okay, carried forward next month too. That 5,000 is receivable from them. They are our debtors. Now the two accounts which still to be closed, sundry expenses and wages account. So when we close sundry expenses, see there is this single amount 500, balance carried down. This is transferred to opposite side, writing below the double line or the total. Expenses always carry debit balance. Now wages, balance carried down 1000, which is carried forward 1st March, balance brought down. So in this way we close ledger account. I will also show you trial balance. So here I will show you trial balance. So trial balance is just the statement of all balances, debit as well as credit balances. Okay, it is a list of debit and credit balances of accounts extracted from the ledger to check the arithmetical accuracy of the double entry transactions. Okay, so here cash, you can see the balance which we carry. Balance comes on credit side, so which side we will carry it? Debit side, right? Cash account has a debit balance, so write here cash balance, write down on debit side. Next is capital, it has a credit balance 15,000, so write amount on credit side 15,000. Next is shelves, it has a debit balance 2,000, so write amount at the debit side, shelves. So in this way we transferred all the balances. You can see here sundry expenses, wages, debit balances, purchases is debit balance, Katumba and Sadaras is credit balance. In this way we transferred all the balances, and when we make total, we'll find out total both side is equal, that is 31,000 here. In this way student, we solve the full sum. You also record all the transactions in the respective ledger account and solve the sum. Okay, in the next video we'll see one more sum for the ledger account, and one more video I am also posting for personal real nominal account to be debited and credited. Watch that video too for the better understanding. Thank you. Have a good day.